Friday, April 21st, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at silver today. Are we going to get the real squeeze in silver? Yes, the silver squeeze movement started over 2 years ago. And I think it's been a good thing. It's woken people up about the qualities and properties of silver, not just as a industrial commodity, but as a monetary metal. And it's gotten a lot of younger people involved as well. Yeah, we're going to look at that. But before we do that, I want to recommend a book that I just finished reading. And after that, I'm going to talk a little bit about my background. So some of you might get to know me a little better for the new subscribers and new viewers, and especially to do with silver and the futures market. So the book that I'm going to recommend is by Dan Jones. He's a historian. It's called Powers and Thrones: The New History of the Middle Ages. And it's a great book if you're into history. Very interesting. I learned many things I didn't know about the history of not just the West, but the whole world during the Middle Ages. And I'd say the Middle Ages are from around the fall of Rome, just before 500 AD, to around the early 1500s, so about 1,000 years. Yeah, there's a lot of stuff in here. One of the most interesting things, though, that I learned, well, and it's speculation, of course, but it's something I hadn't thought about. The impact of the fall of Constantinople in 1453. Of course, Constantinople used to be the seat of the Eastern Roman Empire, the Byzantium Empire, from around 300 AD to 1453. And the Ottomans took over, became Istanbul eventually. But the interesting thing about this is that it pushed the Europeans, especially the merchants and the kings of Portugal, Spain, the Italian city-states, merchant states, to find another way other than the Mediterranean to trade with the East, because with the control of Constantinople, the Muslims and the Ottomans made it very hard. Probably it was probably harder to navigate and conduct trade. So you could argue that we wouldn't have had the discovery of the Americas by the Europeans if it hadn't been for the fall of Constantinople. So the lesson here is, yes, the fall of Constantinople must have felt like a really bad defeat for Western Europe, but in the long term, it turned out to be a great opportunity, because look at what Europe did. They found a whole new world for them. Of course, there were people there already. Just wanted to put that out there. There's a lot of other things they talk about, of course, in this book. And yeah, what about my background? And I've spoken about this many times, but not so much lately. I started out in the late 80s working for a small private bank in Geneva, Switzerland. My degree in university was international relations with an emphasis in economics. I graduated from a university in Geneva, Switzerland. I worked there for 2 years, 2.5 years about. And the firm I worked for, they were heavily involved in government bonds. We did some futures as well. But we did everything for our clients, private clients. We did not just bonds, but stocks, foreign exchange, commodities, options. So I got a good grounding on all kinds of asset classes. I did start out at the bottom, of course, in the settlements or back office, but it was a small firm, so I got to learn quite a bit as well from the people at the front office. And then I came to work in London in 1992, and I came to work as a bond broker, basically government bond broker, focusing on U.S. Treasuries in the cash market. And by cash market, I mean not the futures market. Eventually, though, I went to work for firms that did futures, so I became a futures and options broker. My focus has always been the government bond market, so Treasury futures, Bund futures, which is the German one. At the time, we had BTP futures, the French futures. I traded all kinds of government bond futures, but I also eventually, throughout my career, I did different things for different clients, and my clients were mostly, well, they're basically all really institutional clients. But I did do the odd gold and silver futures contracts or index futures contracts, even though the core of my business was government bonds. So I know quite a bit about the futures market. I worked in the futures market for 20 years. So just wanted to put that out there. So I remember very well back in end of January, beginning of February 2021, we just had Wall Street Bets event where they squeezed the big hedge funds, like all small investors, very young people. And I thought to myself, I'd always known, of course, that the bullion banks have had a big short, always a big short, not just in gold, but silver. And how did I get involved in gold and silver? What was more personal? I started buying gold back in 2002, not futures, of course. I bought Krugerrands the first time I bought gold. And then eventually, a few months later, I started buying silver. And being at a desk following all markets and all futures, I followed gold and silver futures. Eventually, yes, we did trade for some of our clients, silver and gold futures. But I always had a private interest. And I could always tell that the bullion banks were in control. So I thought at the time I did a big, I think it was on a Sunday just before the 1st of February when Silver Squeeze was supposedly starting. A big live stream with a lot of people in the silver space, and a lot of people were excited. They thought we're gonna break through 30 and go to the moon. And I had a bad feeling. I thought we need to be careful. It might not happen as quickly. I didn't expect it to be, the price of silver to be kept where it has been kept for so long. But I didn't expect it either to break out back then. So yes, I was always a bit skeptical whether we would break out right away, because I know the bullion banks have a stranglehold still on the paper price, on the futures price. So I'm not surprised it's taken so long. And as Andy Schechtman has said of late, and he's been on the channel here for a couple of interviews in the last month, he said during Silver Squeeze, people were buying silver to make, out of greed, to make a profit. But what he's seeing now is that people are buying silver because of fear. Fear of what? Well, fear that your money in your bank is not really there, as we found out recently with SVB and Signature Bank and Credit Suisse. There is no money in the banks. They're just there's just a lot of credit. After all, as JP Morgan said, gold is money and silver as well, I would say, and everything else is credit. So what we're seeing now, and there's a very interesting guy that keeps track of all the Comex flow and the Comex stocks of gold and silver, of silver especially. And what you need to understand as well is that Comex is not a really physical market for gold and silver. And you might think, what are you talking about? Well, I remember very well, we got one of my colleagues, big high net worth clients, to trade gold and silver. And at one point, this was back in 2004 and 5, or 6. And I told the client, because I used to speak to him as well, why don't you take delivery of the silver? I bet, that would really put the cats amongst the pigeons, because they don't like people taking a lot of delivery, because it's supposed to be a speculative market just for setting prices. They didn't want ever since the Hunt brothers in the 70s and 1980, Comex and the regulators, yes, they put their feet down. They told the brokers, try to discourage delivery. And I remember talking to my boss when I spoke to the client about taking delivery, and my boss said to me, don't even think about it. So that's how the futures market works. So the fact that Michael's hashtag Silver Squeeze is reporting here that Comex registered silver falls 3.42 million ounces to lowest level since April 2017. So vault totals dropped almost 65,000 troy ounces. So we're going to go through some of the numbers here. He's saying that open interest, again, highest level since April 2022. Open interest is just the number of trades put on in the silver futures. So right now, open interest is 158,879. So each silver futures contract is 5,000 troy ounces. So if you multiply that number, 158,879,000, you get just under 800 million troy ounces, or 794 million. Just to give you an idea, annual silver production is 26,000 metric tons, and that corresponds to 832 million ounces. So there's as much silver open interest position in the silver futures as there is silver produced every year. That's just how much paper trades there. But the interesting thing is that the eligible silver, and that's silver that's not in a Comex, a registered Comex warehouse. This is just silver all over the world. There's 243 million troy ounces of eligible silver, and the registered silver that's ready there in Comex vaults for delivery is only 30,629,000. But if you add both of those together, you get 290%, as he says there. But the actual silver there that is registered and ready to be delivered is only 30 million. And just to give you an idea, 30,629,616, you divide that by 5,000, and it's just over 6,000 contracts, which isn't that much, really. So you can see how things could get quite interesting in silver. We'll have to wait and see what happens. How much of that eligible silver how much can they move, and can they move it quickly enough? I guess probably JP Morgan will be involved, but it's getting very interesting. And this is the reason why a lot of times you get the moves in the futures market that seem counterintuitive. Usually in the pre-market, when it's trading out of regular hours, you see the usual suspects, probably the bullion banks, smashing the price through technical levels, and that leads to selling. But it all looks very interesting, I would say. Does it mean that you need to go out there and buy silver and stack and to make a profit? No, I try to do it whenever I can when I have extra fiat currency after the end of the month, and just keep stacking, physical silver. And yes, if there is a real squeeze in the silver market on Comex, so be it. But in the longer term, as I've said many times, fiat currencies, they go to their intrinsic value, or as Voltaire said, of course, and that's zero. And silver and gold are the anti-fiat currencies, and that's why the bullion banks and the central banks are so heavily involved, because it's a competition against their credit instrument, which is really not money. And we've seen Rafi Faber here. He's commented on this. He says, register silver for sale at Comex sinks to post silver squeeze low of 30 million ounces. After someone took 3.5 million ounces off the registry at JP Morgan Vault last night. So with that, let's quickly look at where the markets are this morning. It's 8:32 a.m. London time. We've got spot gold down $18. Yes, a little bit of volatility in the last few days. I mean, we got down to 1969 the other day, and yesterday we got back to 2012. So there is a fight here around 2000. It's just a round number. Personally, it might impact the gold market or the gold price in the short term, but longer term, I don't see much change in monetary policy. I don't see them really deflating the system. They have to keep inflating it. So yeah, right now we're at 1986, as I said, down about 18. The low has been 1981.85 and the high 2006. Silver is trading exactly at $25 here. It's down about 29 cents. The high has been 25.33 and the low 24.94. Dow futures is down 100 points. The Nasdaq 100 future is down 32 points. S&P is down 11. To the Forex market, we've got sterling down 0.5%. At 123.93, the euro is down 0.2%, 109.50. The dollar is down 1/8 versus the yen at 134.05, and the dollar is up 0.25% versus the Chinese yuan at 690.26. Dollar is virtually unchanged versus the ruble is trading around 81.50. Aussie dollar is down 0.7%, so down quite sharply at 66.84. The dollar is up 1/3% versus the Canadian dollar at 135.26. And the Kiwi dollar is down 2/3% at 61.33. So a bit of dollar strength. But as John Lee said yesterday, and I interviewed John Lee, he's the CEO of Silver Elephant Mining, and I recommend you watch that interview. I'm going to put it up in the cards. He said that the FX market is just a game to keep people distracted from owning real money, gold and silver, and I agree with him 100% there. Anyway, to the commodities, general commodities, we got WTI crude down 0.6%, trading at 76.89. Brent is trading at 80.50, down 0.5%. High grade copper is down 2/3%, just above 4. And platinum is down $4, trading around 1,090. Let's check out the bond markets. We'll start with the U.S. Treasury market. The 3-month T-bill yield is up 11 basis points, 521. I think that's overseas investors hedging themselves against a U.S. government default. I noticed that yesterday we were up as well overnight, and then when the US came in, that yield went down. So it could be foreign investors. The 2-year note is down 3 basis points at 414, and the 10-year is unchanged at 354. Let's check out the UK government bond market, the gilt market. The 2-year yield is continuing to rise, which is bad news for mortgage holders, especially the 2.8 million that have deals that are going to mature this year. They're going to have to roll over. A lot of the mortgages are set off the 2-year swap yield, which is derived from the 2-year note. Yeah, so that's up another 3 basis points at 375. The 10-year is up another 3, around 380. And the 30-year gilt yield is at 414. So there you go. With that, I'm going to wish you all a very good day and also a very good weekend. Take care. Bye.